All good. No, actually, so coming to some tax things and some other administrative issues in Germany or knowledge. Yeah, double taxation treaties, or better to say, double taxation avoidance treaties. Germany has conducted or concluded with more than 90 countries worldwide. This is always in negotiations, and even nowadays, a lot of treaties are under discussion. And also quite important, especially when it comes to the setup in Germany, is that there are currently roughly 20 bilateral social security treaties, which is quite important if there are also expatriates coming from abroad to Germany from such respective countries, and that makes, of course, the social security issue much more positive for the expatriates. So then, of course, Germany, as a member of the EU, is also party of these European directives. They are just basically named a few, but of course there are a lot more. I think the parent subsidiary directive is quite important when it comes to the capital distribution, dividend distributions between the European countries. So, of course, this is something which is very important. And also VAT-wise, there's even currently a lot of things are going on there when you look at the VAT in the digital stage, the VIDA discussions currently. And so I think this is basically, everybody is complaining about the European Union, but to be honest, when it comes to the VAT, I always believe that this is quite positive for the member states and also for the countries there. Administration-wise and court system-wise in Germany, it comes back, maybe remember what I said before. So that Germany is the Federal Republic of Germany. So we are consisting of 16 federal states. And therefore, also the legislation is pretty much federal. So there are many areas where the federal states take decisions. There are other things which are led by the central government in Berlin. But in any case, when it comes to changes of law, most of these important law must also pass the so-called Bundesrat, which is the kind of a parliament where the federal states and the central government meet and decide and conclude on these kinds of initiatives. Then, of course, we have an executive authority. Currently, our Chancellor Scholz and his ministers in Berlin. And when it comes to the judicial authorities, this is just to name here the relevant for this seminar. Basically, this is the BFH, the highest court for taxes in Germany. Very important. And below that, there are many local finance courts, tax courts in many cities all over Germany. The main tax administrative authority, especially when it comes to some, when we talk about, again, here, this parent and subsidiary directive, and the necessary exemption certificates and so on and so forth. Then we are talking about the Bundeszentralamt für Steuern, the Central Tax Office. So handing over to Piotr again.
Thank you, Matthias. I can see that we have one double tax treaty more than you. I'm wondering which one is it?
No, basically, I just said more than 90, actually. I didn't count them all.
Okay.
So might be even 92. I don't know, but
okay, we have to check it. It's really exciting. We have to check it. Okay, look, Poland is to some extent quite similar. I mean, because we are part of OECD. We have also a number of double taxation treaties, which in principle avoid double taxation and double non-taxation of cross-border business, which is quite simple and straightforward if we will not go into details. We have basically like two systems. One is OECD double tax treaties, and second system is based on the European community regulations and directives, which allows for so-called freedom of business, which bottom line is that basically the transfer of funds between entities which are subject to taxation in the European Union should be free of tax, basically, and it is relevant for dividends, for interest, and for royalties. This is like the general rule. The more we will go into details, the more problems we see, and we see that this is not actually the reality, because it is much more difficult to get this exemption. But from the helicopter point of view, we are subject to parent subsidiary directive, interest royalties. Also, VAT is harmonized across the European Union, so it basically shouldn't be a cost for the business. What is relevant right now in the terms of European legislation is ATAD and ATAD 2 directive, which are basically anti-tax avoidance and anti-tax evasion directives, which are to say too much, which are over implemented in Poland. These directives are very often used by our tax authorities to challenge position of the investors, to challenge position of the entrepreneurs, and to improve the tax rate from their perspective, of course, not business perspective. Luckily, we have court system, so we can appeal to court. In Poland, we have our court system is basically divided into civil and administration system. Supreme administrative court is a place where we usually appeal ultimately after going through the administration route. If we do not agree with the decision of tax authorities, then if given part of taxation is subject to European community regulations, then we can appeal to European Court of Justice. We have, similar to our German colleagues, we have centralized system of tax authorities. So we have so-called Krajowa Administracja Skarbowa. This is the main administrative body for taxes, which is supervised by Supreme Administrative Court. What is relevant maybe here to mention that we have always whenever investor or business or entrepreneur has some kind of doubts or questions to the tax authorities, we can always try to obtain so-called tax ruling from this Krajowa Administracja Skarbowa, which will give the investor the security about taxation and rules which he should apply. Okay, we can I think go to the next part. Thank you.
Thank you so much. So in order to keep up with the time, let's look at the major taxes in Germany and Poland. Now we are talking corporate income tax, value-added tax, and other taxes which our experts will mention. So Matthias, again, the stage is all yours for Germany.
Yeah, okay. Yeah, taxes, most important taxes, maybe you can look from two angles. The one just noted here in the top of this slide, the tax revenues in 2021 accounted for 833 billion euros in Germany. And as you can see, there is almost a little bit more than 1/4 comes from wage tax. So obviously this is income tax, personal income tax, wage tax. So that is very important. in Germany, and is also maybe something to note, because quite often we have there's the idea of our clients that, okay, payroll is an easy one, but don't really estimate the tax rules in wage taxation. And also connected then always with social security. This is quite complex, changing all the time, and we really need experts to do that. So this is, and you can see why, because Germany gets a lot of the revenues from there. Then 22.5% come from VAT. Should be even more. You nowadays see also a lot of changes there in the VAT. Just to mention the new regulations coming in the future in Germany, probably beginning from 2025, that we will be forced to create electronic invoices and also be able to receive electronic invoices. I'm not talking about digital invoices, but fully electronic invoices. Like this happens already since 2019 in Italy. So that will also happen in Germany, and that will be, of course, a big change in the accounting, a big change also in the VAT, and also in the business, creating invoices, challenges for ERP systems, and so on and so forth. It's all more or less to increase the VAT income and to avoid any kind of VAT fraud, which happens substantially within the European Union. Yeah, basically, then you can see, of course, the other taxes, what you would expect. There's income tax, there is import VAT, trade tax, and also from corporate income tax. The corporate income tax rate in Germany is this is the most common form of of a company in Germany, the GmbH, the Gesellschaft mit beschränkter Haftung, so it's the limited company, can be a GmbH or an AG, is 15%, plus 5.5%. Still the solidarity surcharge coming from the reunification in 1990 was thought for funding the necessary investment into eastern part of Germany, but survived also even more than 30 years, and is also going to survive for a couple of more years. It's an old rule. Once you establish a tax, you will never get rid of it. So this is 5.5% on the 15%. Then basically jump to the bottom of this slide is the trade tax, because this is an additional tax. It's also kind of a corporate tax, but it's local, is a local tax. So it's always nationwide 3.5%, and then always multiplied with a multiplier applicable for every kind of, for the city the business is located. So it should be at the minimum 7%. On average is probably roughly 15%. For example, here Düsseldorf, the city where we are located here with NHS, we have 4.4%. So it's 3.5 times 4.4%. So so that end up so roughly 15%. And then basically, so this is an important note for all for everybody who is planning to set up in Germany. It makes a difference tax-wise where you start your business, right? Munich, very expensive, for example. Berlin, kind of average. Many small cities, they are doing some kind of a, how can I say, competition in order to provide very low rates there. So it makes probably sense to check that out. Yeah, last but not least, we have, of course, a value-added tax. As Piotr already said, this is harmonized. But of course not the same in all the countries. So many things are harmonized, but still a lot of differences. But anyhow, the tax rate in Germany, standard rate 19%, and then there is a 7% about for food, books, newspaper, and many other things. It's quite complicated what is reduced and what not. So if you have a question there, you probably need to have an expert on this. Piotr, what about Poland?
Well, thanks. As usual, Poland seems to be quite similar but different because we have basically the same categories of taxation. Like we have income tax, which is corporate incomes for income tax for the companies, and personal income tax, which I think is similar to your wage tax. We have also VAT, excise tax, and customs. If we would look at the revenues of fiscus, then it's totally different from Germany because almost half of the revenues is in Poland is coming from VAT. 20% is excise tax, so more than a half of fiscus income is generated by let's say trade taxes, not by income taxes, but by trade taxes. This is probably the specifics because Polish economy is still we are still growing. We are not yet like mature economy. Probably that's why we have more revenues generated from growing and ongoing business and not from not by the investors and the owners of the equity and the capital. That's I think the reason. For corporate income tax, we have in general two tax rate. Basically, corporate tax is calculated on the income, which is difference between the taxable revenues and tax deductible costs. As everyone can expect, not every cost can be treated as tax deductible costs. We have a number of exemptions in our Corporate Income Tax Act. We have also exemptions from taxable revenues. And the most, let's say, painful and difficult point in corporate income taxation for the new businesses is that usually taxable income is very different from, let's say, profit reported for accounting purposes. This is something that is usually difficult to understand for the investors and for the entrepreneurs. For VAT, we have actually not 4 but 5 tax rate. Standard is 23. Reduced is 8. 5. We have also 0. There is a mistake. We have double 5%. One is 0, and we have also exemption, which is not mentioned here. The difference between 0 and exemption is that the business which is exempt from VAT do not give right to deduct input VAT, and 0 tax rate gives right to deduct input VAT from the purchases. As mentioned, VAT is basically harmonized across the European Union. So to reasonable and in majority, it should assure, let's say, neutrality for the business. Okay, I think that's all about this slide. We can go on.
Thank you so much. So just in case to stay in the timely manner, let's breeze through this slide. But looking at Germany, there are so many rates for employment taxation. Matthias, is this because the most revenues come from the wage tax? Is it somehow related?
No, it's just, probably because Germans tend to make things complicated. I don't know, but honestly speaking, the reason is because there is a progressive tax rate. So it's increasing based on the income. And so that is just a formula which is behind it. And then basically the maximum tax rate is the 42%, right? what you can see here. But then there comes basically what it's called in Germany the so-called rich man tax. So you might basically decide on your own whether this is rich or not, but it's basically an income which is higher than roughly 275,000 euros is then taxed with a 45% rate. So basically that's the reason we started with this 24, and then yeah, it's just I know we start lower. This also there's a mistake. I think it's around 10 or 14, I think actually. But anyhow, we can check that afterwards and correct it in this slide. So because the entry tax rate is lower than 24. Anyhow, so these are the tax rates, just to give you a little bit an idea about that. Then very important is that married couples have some big benefit, the so-called splitting method. So basically, this is especially interesting for the traditional couples, I would call it, right? For I say one person is earning much less than the other. So in that case, there is a big difference for married couples. And then basically important is also to understand that the wage tax in Germany is a withholding tax, so it will be withheld by the employer. Same as the Social Security, and usually then, if in case you are using the companies are using a tax advisor for doing the payroll, then the data is transferred directly to the local tax office, and is also a little bit special to many health insurances, because every employee can choose his or her own health insurance. So it can be a lot of different health insurances because there are hundreds available. So that makes it a little bit complex. But your tax advisor or payroll provider, of course, takes care about that. Yeah, because also the Social Security will be transferred always via the health insurances to the Social Security institution. So then also important to understand is when you talk to German employees, they will always talk about the tax class they are, because everybody is allocated to a tax class depending on their status, whether they are single or married and with kids or without kids. Married maybe with a higher salary, or married with a lower salary. So basically you need to decide on this kind of, partly you can decide on the tax class. And this is important for the monthly withholding. Of course, in the end of the year, there is a final tax filing in many cases. So if you paid too much, then you will get this refund. But in general, if an employee only receives this income from this employment, then there is no need to do a final tax filing. So it's not mandatory. But in many cases, it makes sense because of a possible refund. Yeah, this is basically the employment taxation and wage tax in a nutshell. Piotr,
thank you so much.
how does it work in Poland?
In Poland, it's much simpler because yeah, we have basically for employment taxation. I mean, it's simpler and not as usual in tax system. Because you can see that I'm mentioning in my PowerPoint that we have two tax rates, 12 and 32, depending on the threshold of income which have been reached by the taxpayer. But effective taxation is 30 or even 40%. And the reason is that a big chunk of, let's say, fiscal burden on the salary is also Social Security and health insurance. This is basically it basically makes the taxation double, depending on the personal situation, on the also on the fact if you are married or not, if you are reconciling your taxes together with your husband or wife. Then your taxation may reach go over 30%. If you would like to dive into details, I don't think that we have enough time, and everyone will probably need a strong coffee. But what I can recommend to participants is to go to our salary calculator, which can give you a basic overview of most important, let's say, components of fiscal burden, which will be imposed on the salary. But yeah, standard employment is depending on the threshold 12 or 32. And it works, I think, similar across whole Europe, that during the year your employer will remit tax advances after end of the year. Usually during spring, you will file the annual tax return, do the reconciliation, have some adjustments, and same as in Matthias in Germany. If you have only one employment contract, you don't do any extra business or any extra revenues. Basically, once you will do your annual tax reconciliation, you should be at zero, or get a small refund, depending if you have kids or not, stuff like this. So it's quite it is complicated, but for the employee, it should be easy. That's how it works in Poland.
There's
Thank you
maybe
so
one thing I just add for Germany before we move on, because this is important for setting up the business in Germany, and maybe this is also for Poland the case. In addition to the gross salary, and of course from the gross salary of the employee, the social security and the tax is withheld, as I said. But social security wise, there comes an addition roughly 20% on the gross salary as an employer's portion for the social security in addition. So therefore, if you hire people in Germany, you always have to take into consideration one, the gross salary, and plus 20%, roughly speaking, if it's a normal earning employee, for the social security. That's just what I wanted to add.
Thank you so much. Let's move forward because we have around 20 minutes left and we still need to cover the Q&A. We have already around 3 questions. So to all the participants, if you have any questions, feel free to drop it in the Q&A. And now we will talk about the most popular investment vehicles in Germany and Poland. So Matthias, if you could share more about limited liability company as a company form in Germany, that would be amazing.
Yeah, basically, and here I think we can speed up a little bit because I would pretty much focus on the limited liability companies and not about the partnership. So make it quick for Germany. So by far the most common form, and especially when it comes to international investors into Germany, is the so-called GmbH. So we have here a minimum share capital of 25,000 euros, which must be paid in minimum half in the beginning. So 12,500 euros you have to pay and inject into this company in the beginning in order to get the company registered. Right. So if you have the GmbH, of course, then there is the full compliance necessary, right? For payroll, for accounting, for tax filing, for publication of this financial statements. The good thing is with the GmbH, basically, you don't need a German resident as a managing director for this GmbH. Whether this makes sense in reality, it's a good question. Mostly, to be honest, not, because you need someone with the authority here quite often. And it also can have some negative tax consequences, because then it might end up in a double taxation because the management is located in a different country. But anyhow, in theory, basically, it works. Yeah, basically, we have the tax filing obligations, as I already said. There's the yearly corporate tax and the trade tax filing. There is the monthly, mostly monthly, quite often quarterly VAT filing, and also in addition, important to know, a year-end VAT filing. And very important, and it's a big argument in order to take a tax consultant in Germany, you get much longer due dates in case you are using a tax advisor for the filing of the taxes. So this is, of course, a big advantage. Yeah, the process for setting up a GmbH is written here, kind of 6 steps. Articles of association must be drafted, can be usually done with the notary if there's nothing exceptional. Then notarization, also appointment of a managing director. Then you need to, as I said, pay in the share capital on the bank account. That must be there. And then with this evidence, it can be applied for registration to the commercial register. Afterward, that is quite quick to usually 2-3 weeks, and then the trade office registration. This is a minor thing, but it's necessary and more important than the tax registration, and unfortunately that takes quite long. So if you set up a GmbH, really start as early as possible, because especially in the beginning, getting a bank account, I come to that later again, very difficult, takes time, and tax registration is a very personal, people-driven process, still not much digitized in the German authorities. So there's really a person saying yes or no or raising questions. Piotr, how does it work in Poland with your limited liability company?
Yeah, well, in Poland, I think it's even simpler. Because first of all, we have a much lower requirement for share capital, because it is only 5,000 Polish zloty, which is a little over 1,000 euro. What are the requirements? Requirements are quite simple, because a limited liability company should have somewhere registered address, should have at least one shareholder, management board member, and can be even opened online if a shareholder has digital signature. So it can be done even within an hour or two.
Wow.
But then the difficulties can start. Why? First obstacle, which usually our clients see, is the opening bank account. Polish banks are very, let's say, strict on UBO regulations, and this is something which is very, let's say, challenging and needs a lot of effort to provide all the documentation and to show to the bank that this is a real business, not artificial one, and that UBO is fulfilled. That's one point. Second point and second difficult obstacle is actually registration of the company for the VAT purposes. In Poland, we have a very specific system of payments, actually, which is called split payment. That's one thing. That each VAT taxable entrepreneur has two bank accounts. One is normal and one is only for VAT. And if an entrepreneur has no account in Polish bank, then for part of his contractor, it will be very difficult or even impossible to execute the payments because of missing VAT account. That's one thing. Second thing is that we have very strict regulation about registering the business activity for VAT purposes, where entrepreneur has to prove that he will actually take the business activity in Poland, that it is not artificial. We have to provide to the tax authorities explanatory letters explaining what will be done, what is expected turnover, and for instance, if given taxpayer will not submit the tax return for 3 times in a row, or will submit but without turnover, with zeros, then the tax authorities may erase this business from VAT register. And then if given entity is not included in the so-called whitelist, then again, contractors may not be eager to pay, and it will be extremely difficult to conduct business activity. So again, as usual, in general, it seems simple, but when it comes into details, it can be difficult. What is also important is that limited liability company has to maintain all the accounting records according to the Polish Accounting Act. It is obliged also to submit annual tax returns. Financial statement must be submitted to the official register, and it's available online. So we can retrieve the financial statements of the companies online. One important thing about financial statement is that the management board must sign financial statement electronically, which again bring a lot of practical problems, because the management board members must obtain so-called e-signature. This is like officially certified electronic signature. And in practice, it is not possible as long as you don't have so-called REGON number in Poland. It is kind of a registration number for each individual. So it can be really, again, painful process for the management board member who will manage the Polish company to even fulfill basic requirement for submitting financial statement. Because one has to obtain REGON number, then he has to obtain e-signature, then he needs to comply with Polish accounting requirements, prepare financial statements, sign it, and submit it to the commercial court in Poland, which can be a difficult and complicated task.
But isn't it all just easier when you have a reliable partner by your side who helps you navigate through all these pitfalls, you know?
Of course, for the consultant, it is something standard. Part of the process is actually can be automatized, so it is not done manually. But it still requires an effort, and it's really not. I don't think it is even possible to do it without a consultant. It can. You really need the extra person in your company to handle all this stuff. And once you are at the beginning of your, let's say, business path in Poland, then it's not efficient to have separate person for doing like a simple legal and financial compliance.
Thank you so much for sharing, Piotr. We have very little time left, so I'm wondering if we should also dive deeper into the partnership or limited partnership and the branch office topics, or it's safe to say that limited liability company is the most popular form of a company, and we don't need to dive deep into the rest.
I think we can take this assumption. Maybe what is relevant to say is that if any of the participants has any questions or doubts regarding even something that is not mentioned here, then I think we will easily answer it. If not during this webinar, we can do it by email.
Maybe just comment from my side. I totally agree, Veronica, but basically one thing maybe, because sometimes I get questions with regard to a branch from clients, and then is the question whether it would make sense to set up a branch in Germany. And just one thing I want to add to that, despite what many people think, but the compliance of such a branch is not easier than for a GmbH. And also the scope is not smaller than for the GmbHs. In fact, it's in many cases much more complex when it comes to VAT transaction and so on and so forth to have a branch office. So therefore, we always recommend to step away from the idea establishing a branch, registered or not registered. It looks in the first step, okay, we are basically saving money because it's of course don't have to inject the 25,000 and so on and so forth. But in a nutshell, it's not. It's usually finally more costly to our experience.
Thank you, Matthias, for sharing. As for the rest of the slides about the partnership and the branch office to our attendees, this webinar is recorded. So after the webinar is done, we will share with you both the presentation and the recording. So if you cannot stay maybe 10 minutes more, just because we would like to cover also more topics, do not worry, everything will be shared with you via an email. So let's move forward and let's keep the partnerships, also the branch and entities. And let's take a look at the examples of tax incentives for investors. Now, this could be quite interesting. Let's start with Germany, Matthias. What do you have to share?
Yeah, basically also here I can be quite quick, to be honest, because of course there are many financing incentives, whether they are coming from the German government or from the federal states, even from cities partly. And of course, always important when it comes to subsidies, obviously the EU with the funds, what they are having. So, there are many kind of different areas of where you can incentives, if you for new investments, also to get people. There are also incentives when it comes to some trainings or whatever, for research and development, especially in certain areas. And nowadays, when it comes to energy efficiency in your production, you can receive a lot of funds. So it's just there are special companies and special organizations who have completely specialized on these kinds of funds and incentives which are available. And in case it's necessary, we work together with these organizations. Quite interesting and important is maybe to understand that there are these, I listed it in the bottom of this slide. There's for Germany, the so-called Germany Trade and Invest. This is a body who is doing marketing for investing into Germany, right? And they also support these kinds of things and figure out what kind of investments are there. Is there low interest finding available for this greenfield investment and so on and so forth. All the federal states, they have that as well. For example, in the state where I here located in North Rhine-Westphalia or NRW, we have the NRW Invest, or in Bavaria, also a big organization is Bavaria Invest, and all the other 14 states have that as well. So if you are interested in investing in one of these areas, that makes a lot of sense to contact these authorities. And then last but not least, there are also cities, and they have their Department of Economic Affairs, and they also offer local things, real estate to reduce rate and so on and so forth, right? So basically, this is, if you have a question there, where you would like to go to and who could be of help, just let us know. We are more than happy to connect you with the right bodies.
Thank you so much, Matthias. Piotr, what do you have to share about Poland?
When we are talking about incentives, it's again a bit complicated because we have really wide variety of incentives. Usually they're in the form of income tax exemptions, or there is also a possibility to receive some grants for the particular projects. We have special agencies which are, let's say, making contests and evaluating the business plan and giving grants. What I wanted to mention here is something which is maybe not purely, let's say, an incentive, but was introduced to Polish tax system some time ago, which is exemption for holding companies. This is quite, I think, unusual solution, because Polish government decide to provide a special income tax exemption for the companies which are considered as a holdings. This is the purpose of this operation is basically to attract investors to Poland and make like center of business decision in Poland. In the tax sense, the entity which has shares in other companies and receives capital gains is subject to exemption from income tax. That is, I think, a very important advantage for international businesses. What we also can offer to the investors which are not holding companies is research and development incentives. This institution is quite old already. There is a lot of businesses which benefit from this institution, and it is relatively easy to obtain because the process looks like that if given entrepreneur has let's say R&D center and performs some R&D, he needs to evaluate the costs. He needs to confirm with some authority which has relevant expertise that given work is actually R&D and gives added value. And based on this, qualified costs may be deducted double as an tax deductible costs, which gives additional tax shield for the entities. We also have so-called Polish economic zone and special economic zones. Those are areas of Poland where given special authority grants let's say consent and calculates the investments which will be done by the investor or a business and provides for so-called public aid, which is available also usually in the form of tax exemption. In some cases, it is not only the income tax, but also property real estate tax. And similar to Matthias, we have many institutions which are like specialized in helping to obtain public aid, helping to obtain the grant. We can also assist with this. We have a relevant expert in Accace. So if you have any, let's say, more detailed questions, then feel free to ask in Q&A.
Thank you so much, Piotr. Now moving on to the absolutely last part of the presentation, then we will answer the questions in the Q&A. So anyone who cannot stay longer, do not worry, everything is recorded and will be shared with you afterwards. So let's move to the potential traps and surprises. I think the most interesting and important part. So Matthias, anything to share about Germany?
Yeah, we listed a couple of things where we, while working together with our clients, get sometimes surprises. It's basically more or less listed these kinds of things which came into our mind when we were talking about this webinar. So maybe the number one thing, this is unfortunately something which is kind of negative in Germany, but for people in Germany, this is very, very, very common, unfortunately. And this is the scale of digitization. This is in Germany, not only in government, but in general is surprisingly low. And we sometimes even face from our clients coming from abroad, they are completely surprised. We are talking about Germany, right? We are working with this industrial country. So how can it be, how can these kinds of processes take so long? Yeah, it's many times, very often, especially because of this non-digitizing and many processes are still very much people-driven. I talked already about the registration for tax purposes, for example. Here, nowadays, at least the format is digital, right? But then working on this format is completely people-driven again. And this is surprising, and sometimes even clients think we are lazy, and it's difficult to convince the client to say no, it's not us. Basically, it just takes so long here because of also not enough people in working in these authorities, right? Because of a lack of educated people nowadays, which is also a big issue on the labor market currently. Okay, this is digitization. So then for foreign investors, I think we can do that very quick because this seems to be in Poland exactly the same. Open a bank account, especially as a foreign investor. And I'm not talking about coming from some crazy country somewhere, right? Even companies from the US, they have big issues, or coming from France, big issues to open a bank account in Germany nowadays. So if you want to set up a German GmbH, make sure that the first thing what you do is contacting banks. If you have a bank which has a setup also in Germany, that is definitely the one to go with. Doesn't matter what it costs, because they will probably open a bank account in a reasonable time. 6 months is basically nothing. What I see in the past, what I saw in the past. Yeah, then another thing is maybe also a little bit related to this first issue with the digitization, but not sure, is the capital gains. When it comes to capital gains, especially in the European Union, as Piotr already mentioned before, ideally it should be 0%, right? Ideally. But what you need is you need an exemption certificate for that, or you need to get a refund of the paid capital gains. And that is nowadays also an issue, because these exemption certificates or the refund processes, with the central tax office in Germany, take very, very long time. So really, this is something which is really, I must say, unfortunately negative. Real estate tax, yeah, small issue. If you are not doing a greenfield investment, but you may think about acquiring a company in Germany and doing an asset deal, please have in mind, if that company owns real estate, there is real estate acquisition tax also applicable. And the rate is depending on the federal state, can be 4.5%, can be, I think, top rate is currently 6.5% of the value of this real estate. So this is a reasonable, a substantial amount. Chamber of Commerce, if you have ever wondered why Germany has so many foreign Chamber of Commerce all over the world, the reason for that every company in Germany must be member of the Chamber of Commerce, and therefore they are really heavy funded. So this is the reason. So also, if you have a setup in Germany, you have to pay a fee mandatorily to the Chamber of Commerce. Tax registration and tax rates. We already talked about that. The seat location is important with regard to the trade tax. Then church tax is a little bit special. If you are still member in a church, Catholic church, Protestant church, you have to pay church. Many people leaving the church in Germany because they say because for some good reason, but of course always a little bit part of this reason is saving the church tax. And last but not least is the tax audit. One thing is important, especially in the beginning. Mostly in the beginning, in the setup of a company, there is a VAT refund because of missing sales, but already of costs. Don't be surprised. There might be a special tax audit for the VAT in the beginning in these cases. The other thing is tax audit. The only thing I want to mention here is every company is classed is also size-wise by the tax office, and depending on your size, will be a tax audit on a random basis or on a subsequent yearly basis. So the bigger you are, the more tax audit you will receive. That's a quick run through these things, and basically, Piotr, You still have 5 minutes, I would say.
Okay. I will be quick. I have just a few short points which can be a surprise for a business and investor in Poland. First is the withholding tax, and it's like a few aspects of withholding taxation, because this is withholding tax is something normal which we used to consider when we think about dividend payment or payment of some royalties or interest. But Poland has specific regulation which also impose withholding tax on the payments for so-called low added value, and there is only an exemption of this kind of services. So whenever we would pay for advisory services, even for notary services abroad, we will consider if withholding tax should be remitted in this case. So this is something which can be surprising. Also, since more than 2 years, there is a new mechanism which is called pay and refund mechanism. So an investor can be surprised that even though he's allowed to benefit from exemption for withholding tax, in case a payment exceeds 2 million of Polish zloty, he still needs to pay withholding tax to tax authorities and then apply for a refund. This is a painful process in the terms of cash flow. There are ways to avoid it, but it is difficult and it can be surprising. Another thing which I wanted to shortly mention is the minimal taxation, which will come into force next year. And it is applicable for the companies which has a loss or has less than 2% of profitability. And the investor can be surprised that even though his business is incurring losses, he still needs to pay minimal tax, which is actually income tax. So why pay income tax if there is no income? There is a loss. But this is the regulation. This is the a very pro-fiscal approach of the tax authorities. We also have a special regulation on taxation of profits from commercial real estates, from commercial buildings, actually. And again, even though the company as a whole can be in a loss position, there may be an obligation to pay income tax if we own a commercial building and, for example, we lease it out and we have profits from this. Last point which I wanted to mention is exit tax, which can be applied in very, let's say, surprising circumstances. For instance, in case of merging two companies, the tax authorities can approach this case in a way that we are trying to, let's say, diminish the tax which has been paid to the tax authorities. So we are restructuring something, and they may try to impose an exit tax on the company which is actually not exiting Poland, only restructuring. So those are, I think, the most interesting traps in Poland. We have many more. If you are interested in more traps, then feel free to start your business in Poland. We will guide you through.
Thank you so much for sharing. Now the official presentation part is over, and I know that we are quite over the time, but let's maybe answer some of the most relevant questions that we can find in the Q&A. So I want to stop sharing so that all the participants can see us all. And let's start with the very first answer or question. This is addressed to Germany. One of the attendees is asking, as a foreign company, do you need a legal entity in Germany to be able to run a payroll? So if you're a foreign company,
this is a difficult. This
Yes.
is a difficult question. With the legal company, definitely. The question is whether they have a permanent establishment for wage taxes, and this is something which is nowadays sometimes denied by the tax offices when you apply for that, and there is no legal entity and no registered branch, and that it needs a detailed analysis, because the reason is, if you have no permanent establishment for the wage tax, you cannot withhold the wage tax and send it to the to the tax offices, and the employees then get their full amounts, and they have to pay individually to their income tax to the tax offices on a, for example, quarterly prepayment basis, which is of course not favorable from a company point of view, and also not from an employee's point of view. This is difficult, but to answer, with a legal company, no issue. With no legal company, depends, and actually there must be substance. If there's no substance, really, a business, also with an office or something like this, really, then it can become a little bit difficult.
I see. Thank you so much for answering. Then another question for Poland this time. In Germany, it was mentioned that the process of digitalization and digitization is quite difficult. It's very slow. How is it with Poland, Piotr? Because you were mentioning that opening a company can be done within an hour online, but what about the taxes?
Actually, there are good news, because digitalization of whole tax system in Poland is progressing very rapidly. You can do almost everything online without visiting the tax authorities, as long as you have this e-signature, which is obtained by the taxpayer. So you can submit the tax return online. For corporate income tax, for example, there is even no possibility to do it in paper right now. You can only do it in electronic form. The same goes for VAT. And next year we will have a huge step in digitalization, because we will have so-called KSEF, which is electronic system of e-invoicing in Poland. So it means that there will be one big database of invoices, which will be sent by the taxpayers to the database, and then the buying taxpayer will download the invoice from the database. So it will be like you will not need anymore even printout of the invoice, which will be issued. So it sounds very good, and for sure it will improve the facing of tax fraud in VAT, which is very relevant for Poland. So I would say we are very advanced in this. Most of the cases can be handled online without visiting tax office.
Amazing. Thank you so much for answering. And perhaps the last question again for Germany. One of the attendees is asking, is it possible to open a permanent establishment only for the duration of a project in Germany instead of incorporating a limited liability?
Also, we don't have these project companies. Also, this is, of course, you can have a permanent establishment. Also, either you register that, or you just have it because it is just there, because there is some taxable transaction. But there is no special form like in other countries. Sometimes you have these kind of projects, branches, or these kinds of, or short-term 6 months branch or so. This is not available, but of course you can have a permanent establishment, and then basically if that business is done and you have fulfilled all your compliance needs, then it's done.
I see. Well, hopefully this answered the question of the attendee. We are way over the time, so I would like to thank everybody for attending, and both you, Matthias and Piotr, for answering the questions and presenting all these interesting details. an organizational information to the participants. As I mentioned, this webinar was recorded. This will be shared also with you, including the presentation after the webinar is done. So once again, I would love to thank you for your attention, for participating, and wish everybody a wonderful rest of the day.